Hey, hello again, everyone. Welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. And as you know, I'm part of the outreach team at Silver Bullion over in Singapore. Hello, one and all. Seymour Rivers, how you doing? Peter Frowine, how are you doing? Peter Frowine, right off the bat. Let's take a look at this. The only safe banks in the world now, your mattress and Russian banks. Wow, how did we ever get to that, right? Well, I always believed in the mattress part, so I'm with you there, but world's changing. The world is changing absolutely. Um 49 fine, how you doing? So appreciate you guys being here. If you can, let me know how the audio is coming in for you. So today what I'm gonna do is take a look at three clips from the past Nick Giambruno interview. Of course, we'll head on over to silverbullion.com.sg, our website, take a look at the gold and silver price. But I want to go ahead and take a look at a fairly recent Janet Yellen testimony where she said some very telling, interesting, and telling things. We're going to go over it, match it up with a CNBC article, and then we're going to match it up with, if you noticed, I spelled consolidation with SAULE, that being for Sally Almarova, because she said something a while back, a couple years back, very interesting and telling of where we are going today. This one, I tell you what, it's. I hope it's going to be an eye opener because we really got to take a good hard look at what's going on. So, I'll be with you guys shortly. Appreciate you being here. And hey, guess what? Today is my birthday, 55. I'll be with you guys shortly. Couple seconds. All right. So, hello again, everyone. Whoops. Welcome again to another edition of SBTV Silver Bullion Television. This is a product of the outreach team at Silver Bullion, silverbullion.com.sg, where again we do specialize in wealth protection. And it's getting more and more important, as you folks already know, you already see it, feel it, think it. You know what's going on out there. It's really, truly getting about wealth protection, truly securing your wealth. And this is what we do specialize in at Silver Bullion. So I do hope that you can subscribe, give us a thumbs up, and hit that bell. These always do help us out greatly. Social media. You can find us at silverbullion.com.sg, Facebook, silverbullion.sg, Twitter at silverbullion.pl. Silver Bullion SG is where you can find us on Instagram, audio only versions. You can find us on bit.ly/SBTV, iTunes /SBTV, Spotify, and Crisis Tracker. I think you folks know by now this is a free app you can have on your desktop or mobile phone. And some of the things, let me pull up here, some of the things that we looked at in Crisis Tracker, this one was very interesting where Warren Buffett, 9 best quotes about banks, lightly edited for length and clarity, but 9 quotes from Warren Buffett. And I really want you to see quote number 4. Very, very telling. Quote number 4, it's the best one. In the old days, the only way you could stop or run on a bank was basically for somebody to come and pile up gold. They used to race it to the branches that were having a problem. If the CEO of the bank came out and said our Basel II ratio is 11.4%, the line would just lengthen. It would not get to, well, it would just basically not get the job done. But gold got the job done. Interesting coming from Warren Buffett. That's what he had to say. Other articles from Crisis Tracker. JP Morgan, if you can believe this, they own a bag of rocks. Basically, LME contract for nickel. They opened it up, and what was there was just basically a bag of stones, a bag of rocks. How does this happen? How does this happen? Remember about a year ago or so, we saw nickel have a very, very good day, and all of a sudden they had to shut down trading for, I think it was like 2, 3 days, whatever it was, and then it opened up again, and we saw nickel down some 20,000 after that nice run. How does it happen? Kind of makes me wonder, What about all these bars on Comex? Are they real now? I mean, if JP Morgan is storing rocks at the LME or with the LME, how you know they're storing real silver now with Comex? Kind of makes you wonder. So these were some things on Crisis Tracker. The Fed circumvented the debt ceiling to borrow billions for failed banks. And this one here, gold prices could notch an all-time high soon and stay there. And we are seeing gold fooling around with that 2000 price point. We'll take a look at that later. And of course, unsound banking, why most of the world's banks are headed for collapse. So these are some of the things on Crisis Tracker that we do take a look at. Join the group. Join the group t.me/crisis tracker. And of course, join our mailing list, sbtv at silverbullion.com.sg. And in the subject, just go ahead, type in mail list. And here we'll let you know on upcoming guests, new videos that are out. If you got questions you'd like to ask the guests, go ahead and contact us that way. We'll see if we can get them in for you. See what's going on with the reserve, which just might possibly be the world's largest silver vault by capacity. Get updates on that, and of course, see what kind of promos we have going on. Um, Later on we'll have features such as maybe book a strategy session of sorts with us, things like how to collateralize your gold and silver and trends to watch in 2023 and other things as well, specific perhaps to your geographic location, whether it may be Europe or Asia or in the States. So do go ahead and join that group. So let me take a look at the comments here. Okay, sound is all right, thanks, I appreciate that. um John Bethea, banks always fail at times like this. That is true. It's a very difficult time right now for banks. Well, I guess we could say that. Um, Let me see what else is out here. Let me come back to this one here. Let's see. You know what, William? I'm going to have to take a look at that one. I've been kind of hearing some chirping going on, but I'm going to have to take a look at that. Thank you for bringing that up. Seymour Rivers, thank you, appreciate that. Thank you very much. Let's see. Eh, I wish about 24. I wish it's more than double that, my friend. But thank you kindly. Thank you kindly. Um, Pablo Pina, I appreciate that. And you know what? I'm gonna say yes. Silver Bullion Vault is more credible than the LME. I tell you what, our vault, we're probably one of the only guys that do actually check what's coming in the vault. I mean, we're making sure that the gold is gold. We're making sure that the silver is silver, the proper weights, the proper purity. And again, part of that is because we have that peer-to-peer program where you can collateralize what you have with us. So another reason why we're over there making sure that what is going into the vault is real. Not many vaults will go ahead and do that for you, but we are one of them that do. So let me move on. And 21, yeah, I wish that were true. All right, so today I want to go over Janet Yellen's recent testimony, the concern for community banks, and an article from CNBC, and of course Sally Almorova. Remember, she was nominated to head up the office of the comptroller. Remember that a few years back. We're going to go back and see what she had to say, because what she said back then, it's playing out today. Okay, so we want to check, is there a tie-in where these cards on the table today are speaking power transfer and wealth transfer? And let's just have a bit of a thought experiment. So before that, I want to head over to our website, silverbullion.com.sg, and check on the gold and silver price action, and then give a shout out to Nick Giambruno from the Financial Underground for having that interview with us and go over three snippets from what he said. So let me go over to our website here, silverbullion.com.sg. Let me go ahead and refresh this. Promo going on. Gold Maple Leafs 2021 and prior, $50 over spot. It's just $50 over spot price. That's a pretty darn good deal. Let me get back to that. So if you are in Singapore, definitely go ahead and head over to our shop and pick some up at Millennial Walk. If you are storing with us, go ahead and pick some up as well. I mean, go ahead and put it in your storage account. And once again, you own it. Once you buy it, you own it. It is yours. 15,000 capacity, ton capacity silver vault still being built. Of course, hear from the experts. But let me move down. Silver price 23.28, basically unchanged. Gold and silver unchanged right now this morning here in Asia. Nickel down a bit. Down some $206, but we can guarantee you these are not rocks. And these are not anything else but true nickel briquettes. So again, prices pretty much unchanged this morning. Gold silver to ratio about 85, so that's kind of unchanged from last week as well. And again, these are some of the items that we do have. Let me check on that promo price here. So all you need to do is click on that banner. Gold Maples 2029 USD. So we have 7 at the shop. You can come down and pick 90 in the vault. This is for 2013, 2014, 2018, 2016, 2011, 2009. Well, those are out of stock, but again, if you do store with us, we do actually have quite a bit. So go ahead and take advantage of these prices and load up. It is definitely a time that you would want to be loading up. And again, probably the best way to get value for money on silver, especially, are these 1,000 ounce LBMA good delivery bars. 3 of them in the shop. Run down and pick them up, or we have 333 ready to store, ready for you to own in the vault. All you need to do is, if you have an account, great. Just go ahead and purchase it. If not, you can sign up for. There are basically 6 types of account. Let me pretty this up for you. Personal account, joint accounts, trust accounts, joint account with the minor, business account, and retirement account. If you thinking of a retirement account, up here you see this tab IRA. You can go ahead and click that. Otherwise, personal account is probably the easiest. Just basic information, name, some type of ID such as a passport. Fill out the application, and you're good to go. We'll go ahead and make sure it's all pretty, all nice and neat, and then that's it. And references, we do appreciate if you would go and put in SBTV. That helps us out quite a bit. It helps us out a lot. So again, do appreciate that. 6 different types of accounts. Uh, you can go ahead and shoot us an email, sales@silverbullion.com.sg, and we'll help you figure out what might be the best account for you. So shoot us an email. We'll be there for you for sure. Let me take a look at a few comments here before we move on. Um, let's see. Okay, all right. I guess it's going okay. You guys are off to a quick start this morning. That's for sure. Let's see. Richard Martin, who is the independent auditor for the Vault Silver? Well, if it's with us, we have audits 4 times a year, and the independent auditor, I'm Vincent. Or we can we say who it is? I mean, I don't think it's a big secret, right? I mean, I lately it's been well, I'll let Vincent. Can we say who it is? Because I know we posted anyway on the website. So I'll wait for Vincent to let you know who the auditor is. But it is audited 4 times, independent auditor. It's a big name auditing firm, and again, this is also to ensure that what we say is there is truly there. What we say you own, you truly own, and it is in your name. That is one of the things that is checked when we go through the audits. What does Silver Bullion own, and then what do we not own? So, which means you guys. So that is something definitely we go through. So I'll wait for Vincent to get the the clearance on that one. uh, okay, so here we go. Richard Martin, it's HLB International. So they are the ones that go ahead and do the audit. Vincent, thank you. I appreciate that. So let's move on to 3 clips from Nick Giambruno from the Financial Underground.
Imagine Bitcoin as a digital version of gold. It takes all the properties of gold that made gold good as money. Namely, it's resistant to debasement. And gold, nobody can just get up and make more gold. And that has made it a good store of value, which has helped its store of value is an essential function of money. So that is why gold is a good store of value, because it's relatively hard to debase it. And to be even more specific, the annual production is insignificant compared to existing supply of gold. It's like 1 to 2% at most per year. It's been pretty consistent. That's a way to measure the hardness, or how hard to produce a certain commodity is. Gold is the hardest of all commodities. That means its supply grows relative to the existing supply at the smallest rate. No other commodity is even close to gold in that regard. And Bitcoin replicates that very, very desirable characteristic.
All right. I see Vincent chiming in. Let me get what he had to say out here. If you see gold close above 2,000 on a weekly basis, know that it is significant. The last time it happened was August of 2020. It is a strong signal for higher gold prices. So, Vincent, watching those weekly charts. Thank you, Vincent. Appreciate that. Nick Giambruno, Bitcoin resistant to debasement. That is true in a sense because there is going to be a cap. There's just going to be a certain amount of Bitcoin made. There's going to be a cap. But I often wonder, once that last Bitcoin is made, how then does the money, so-called supply that is not able to expand, how does it then account for new things that are coming into the system? I just wonder about that. That's all. Gold is not created like fiat. That is true. We all know this is it cannot just simply be created. Unless you're talking maybe GLD or some type of ETF, that's a different story. Store of value, essential function of money. That is true. Gold has been at the base of what money is. It is what money is for some 5,000 plus years. It is, I've never heard of gold failing. And I'll get into that in a bit. Would you call Bitcoin digital gold? That is a question I'd like to ask you. We hear this all the time. How do you feel about this? Do you call Bitcoin digital gold? In reverse, would you call gold physical Bitcoin? Would you call it physical Bitcoin? But can the two work together? Can the two work together? Because I think you are seeing that it is important that we have alternative asset classes that can function as a currency that have the properties of money. Can the two work together? What say you? Another clip from Nick Giambruno.
What happened with Silicon Valley Bank is a bailout. I mean, these people are professional liars. Central banks and government officials, they're all liars. I mean, don't give the U.S. government any credit. They're no different than the Argentine government or whatever government. They're all a bunch of liars. So when they come out and say there's been no bailout, there has been a bailout. They bailed out the depositors. So basically, what is going on now, what was probably the next step, is that, the FDIC, the deposit insurance, which is another scam in the first place. The FDIC has a limit of $250,000 that they insured. But now the Silicon Valley Bank, there's a lot of deposits over $250,000, and they're being made whole despite that there's supposed to be this limit. So that is a bailout. That's a bailout for those people. And it also is creating an enormous moral hazard too, because now there are whispers like, hey, let's just do away with deposit insurance and insure all deposits. And how are you going to do that? You're going to do that with the money printer. So I think that's the next step. The next step is going to be to insure all deposits. It's just going to be all backstopped by currency debasement.
All right, preach on, Nick Giambruno. Let me throw in something Vincent also said. Vincent, he's got his eyes on the charts. For silver, it's a $28 weekly close. So for gold, was at 2,000 level. Silver, 28 weekly close. Vincent, when do you think that 28 weekly close is going to come? When do you think it's going to come rather consistently? All right, Vincent, putting you on the spot there. 28. What do you think? Will we see that? When do you think we'll see it? What else is out there? Let's see. Yeah, Henry, the cup and handle is all I'm waiting for to play out. When I looked at the charts, you can definitely see the cup. You can see the right hand side of the cup is actually longer or larger than the left side of the cup, so that's a good sign. But the handle had me kind of concerned, or it still does in some ways, because it's not a uh, I don't know if classic is the right word. This handle got some movement in it. It's not a nicely shaped handle, but nonetheless, it is taking that handle shape. So You're waiting for the handle exactly, and Vincent, the handle is almost formed. That is true. So good call, Vincent. Good call. Good insight there. Appreciate that. Nick Gianbruno, Silicon Valley Bank was bailed out. Yes, it was. It was. Central banks and government officials are less than truthful. Yes, they are. Yes, they are. So since we're not naming names, I guess I could say that and have some safety there. Investors were made whole, and this is the good and the bad of it. I mean, investors were made whole, but which investors, which banks are going to be the ones that are made whole? And this is what, of course, we're going to take a look at. Do away with deposit insurance. All right. So what say you? What say you? Should we do away with deposit insurance? That's a tough one. That really is a tough one. Let me take a look at a few more comments here. Um, let's see. Yeah, 495 BTC and gold are totally different animals. I'd agree with you there. Maybe parallel at best. I really don't get all of the comparison between them. Yeah, I mean it there are some things that are similar. Uh, they run parallel, which is why it may be a good idea to cross back and forth between the two. I mean, if you imagine a ladder, you have gold on the left side, you have Bitcoin on the right side, and then you have the rungs going in between. I think it's good to be able to understand how to cross over from gold to Bitcoin, Bitcoin to gold using those rungs. So I just kind of look at it that way. It's good to be able to cross in between. One more clip from Nick Giambruno.
Bonds are a horrible investment, I have to say. Fiat money bonds, like I could not think of a worse investment. First of all, the contract, a bond is a contract. It's denominated in a fiat currency. They're guaranteed to be debased. So why would I want to buy a promise to be repaid in something that's going to be debased? That's a horrible thing in the first place. People don't even realize, and the inflation is obviously much worse than all the government statistics. We talked about that. But then there is the value of the bond risk, that if the value of the bond is related to interest rates inversely. So if interest rates go up, the value of the bond goes down. So even if there is no currency debasement, and you're at the whim of what the central planners decide for interest rates. So I don't want to be at the whim of the committee, the FOMC, and these central planning bureaucrats. I don't want to be at the whim of that. It's, again, another thing of mainstream finance, and it's sad because a lot of retirees are depending on bonds, and a lot of retirement funds, pension funds are full of these things. These are awful.
All right, let me pull up a couple comments here before we head on. Pablo Pina, I need to also take a look at this. Thank you for sharing it. Chancellor Schultz went to the States to meet up with Biden for an hour of talk and flew back home. That's pretty interesting, pretty telling because Deutsche Bank is now in focus. So again, is this thing done? No, no way. In no way is it done. Anyway, nonetheless, bonds are a horrible investment. We saw what happened with SVB. Bonds should be a relatively safe investment. I mean, yes, you can invest in a bit riskier types of bonds, but bonds, especially government bonds, they should be fairly safe. Nonetheless, they're a horrible investment because we're seeing interest rates go up. They are guaranteed to be debased. Inflation is worse than statistics. Given we are at the whim of central banks, retirees are depending on bonds. And that's the scary part. Retirees are depending on bonds. Even guys who are getting close to retiring, again, your pensions. We saw what happened in the UK with the gilt. Pensions took a hit, pensions were invested in bonds. So, again, things like pensions, 401ks, and even social securities. Uh, they're being looked at. They are being looked at by Congress. Before it was definitely Congress would not want to even talk about social securities. It was definitely a way to get booted out of Congress. But they're starting to talk about even social security. So that's a pretty telling sign. So let me move on. Topic of the day: more banks to fail. Consolidation. Again, the reason why I spelt it this way was think of Sally Omarova. We got to go back and remember her because what she said is kind of playing out, and we'll take a look at it. First, I want to go over recent Janet Yellen hearing, an article from CNBC, and then we'll go ahead and take a look at what Sally Amarova had said. So I hope you can remember her and what she said when she was nominated for that office of the comptroller. Are the dots being connected for power and wealth transfer? Well, I'm going to tell you. I'll lay out my little case here, and then you tell me. You tell me what you think. So let's take a look at this first Janet Yellen clip.
Much safer and much sounder. As I mentioned, we're doing a lot more to try to look for financial stability risks that may not be immediately apparent, but to look in corners of the financial system that are not subject to regulation outside those areas in order to try to detect threats to financial stability that may be emerging. So would I say there will never, ever be another financial crisis? Probably that would be going too far, but I do think we're much safer, and I hope that it will not be in our lifetimes, and I don't believe it will be.
All right. Remember that. I believe we won't see another crisis, not in our lifetime. You got that one right. You sure got that one right. Those were the words of then Fed Chairman Janet Yellen. I think this was about 5 years ago or so. After juicing up the economy with QE after QE after QE, confidence was supreme where the government, the economic brain trust, gave themselves a pat on the back, a few fist bumps, called it a day. Yeah, we fixed it. We glued everything back together. We threw some duct tape on it. All good. Everything's all good. Let's go celebrate. That was the sentiment. Well, here we are again, seeing a meltdown. Yes, in our lifetime. It is in our lifetime. And yes, here we are again, where we are seeing bailouts with the bigs. The bigs continue to get bigger. And this ain't going to stop. We are going to see the bigs continue to get bigger. Last time, 2008 great financial crisis, it was relatively safe mortgage-backed securities that got into trouble. This time it is the relatively safe bond market. Again, speaking with in terms of like Silicon Valley Bank, I mean, it's really starting to trickle and ripple, and it is reaching from shore to shore. Gotta say, at this point, this is where when people ask me, and this is true, hey Patrick, how's gold doing? I tell them, hey, gold is doing just fine. Haven't heard of a gold failure in 5,000 plus years that it's been around. Gold is doing just fine. Anyways, I want to go over that congressional testimony that Treasury Secretary Janet Yellen gave. Allow me to go through a couple clips. I think you'll find it pretty interesting.
Banking issues we're dealing with on it. Will the deposits in every community bank in Oklahoma, regardless of their size, be fully insured now? Are they fully recovered? Every bank, every community bank in Oklahoma, regardless of the size of the deposit, will they get the same treatment that SVBP just got or Signature Bank just got?
A bank only gets that treatment if a majority of the FDIC board, a supermajority of the Fed board, and I, in consultation with the president, determine that the failure to protect uninsured depositors would create systemic risk and significant economic and financial consequences.
So what is your
we
plan?
made that determination.
Right. So what is your plan?
What is your plan? Will deposits, regardless of size, be fully insured in smaller banks? Will it? A supermajority of the Fed board, Yellen, and the president will decide. We're going to say who gets who we are going to make whole. We will decide it. Again, the game of the Fed and government choosing winners and losers continues. I smell MMT, modern monetary theory. I smell UBI, universal basic income. ingredients in the cake being baked, and there are more that we probably don't even know about. It's going in the oven, being baked. And when it's done, we're going to hear them say the modern version of let them eat cake. We're going to hear the modern version of this cake full of MMT, UBI, and whatever other alphabets they can think of, including CBDC. Let them eat cake. That's what's going to happen sooner, probably sooner, more so than later. I want to pull up a question here from John Bethea. If a person has a lot of metals in the USA, how could you get it transferred overseas? John, in the case for us, just simply contact us. Um, what we would need you to do is go ahead and list the metals that are coming in, because we would need them to be LBMA. Make sure they are uh, seen as investment type of metals, and then we'll go ahead and walk you through it. It's really a simple process. We try to make it as simple as we can. So that's probably the biggest job you would have to do is just tell us what metals you're looking at transferring in, and we'll work with you on that. So that's a great question. So again, this cake that eventually they're gonna tell us we can go ahead and eat that cake. Anyway, one more clip from this testimony on congressional testimony.
Right. So what is your plan to keep large depositors from moving their funds out of community banks into the big banks? We have seen the mergers of banks over the past decade. I'm concerned you're about to accelerate that by encouraging anyone who has a large deposit in a community bank to say, we're not going to make you whole, but if you go to one of our preferred banks, we will make you whole at that point.
Look, I mean, that's certainly not something that we're encouraging.
That is happening right now.
That is happening because depositors are concerned about the bank failures that have happened and whether or not other banks could also
No,
fail.
it's happening
And
because you're fully insured no matter what the amount is. If you're in a big bank, you're not fully insured if you're in a community bank.
Well, you're not fully insured. And
You were at Signature, and it just barely met that threshold. You were at Signature.
Well, we felt that there was a serious risk of contagion that could have brought down and triggered runs on many banks. And that's something, given that our judgment is that the banking system overall is safe and sound, depositors should have confidence in the system.
Oh, yes. All right. What is the plan to stop bank runs? Warren Buffett said back in the day you'd have to kind of ship some gold, send some gold to that office that was in trouble. But what is the plan to stop bank runs on smaller community banks, perhaps regional banks? Because they do have a function to play. These community banks, these regional banks, they are important. We won't make you whole if you are at our preferred bank. And this is part of the problem. The bigs get bigger, smaller guys get regulated. They get regulated out of business. Yellen says depositors are moving money because of the concern for more bank failures. How about they're moving money because you are saying you will make them whole and you will not make other banks whole, or you're going to pick and choose the winners? So people realize, well, as much as I love this bank, I think I'm going to have to move on over to another bank just to get that insurance. And that's the sad part, because there's nothing wrong with these community banks. It's just that you have these people at the top who are going to say who we will insure and who we won't. Big bank fully insured, community bank not fully insured is what it comes down to. Banking system is safe and sound. Depositors should have confidence in the system, is what she goes on to say.
A few moments later.
You can actually make money and preserve it right now with gold, because I think it has to be repriced higher to reflect the reality of much higher inflation. We're not going to go back to 2%. Probably in my lifetime. It's going to be much higher than that. And when investors come to terms with that, they're going to bid up the price of gold much higher.
All right. Peter Schiff chiming in. Yellen says we're not going to see that crisis in our lifetime. Peter Schiff says we're not going to see that 2%, at least in his lifetime. I think Peter's right. I mean, well, Janet is she's already wrong. Let me chime in here with something Vincent said. On silver industrial demand, as long as the world is still making iPhones and people want to buy them, silver will play a part, but it's probably the banking crisis that will send silver higher. That is true. I mean, when you think about the products, it uses very, very little silver. So even if the price of silver were to shoot up, because there's such a small amount of silver in the products, it would not affect, let's say, something like a keyboard or maybe an iPhone. All it would not affect it all that much. But if you're looking at something, let's say, like if silver continues to be a key component in, let's say, solar panels or medicines or medical industry or other things like that, then yes, that industry would need more and more of that silver. And because they need more, maybe in bigger quantities, you may see prices go up in those types of products or services. But anyway, alrighty. Do you have confidence in the system? And this is an example of what is happening real life, real time, regarding with this testimony that we seen from Janet Yellen. You know, the lady who said, of course, we won't see another crisis in our lifetime. All right, so we'll give her a little bit of a break for now, and we'll move forward to that article that came out last week where the 17 billion wipeout of Credit Suisse bondholders has not gone down well in Europe. And some of the key points in this article, the regulator FINMA announced that the so-called additional tier 1 bonds that are regarded as relatively, what is relatively? Risky is what they say, will be written down to zero. The move has angered, of course, these AT1 bondholders as their investments could be lost. And of course, the takeover deal worth 3.2 billion by UBS was agreed last week with the help of Swiss authorities. So one section again, just to recap this, Credit Suisse's bondholders are set to be wiped out. I gotta see where they are today with this, but said to be wiped out following the struggling bank's takeover by UBS, causing them to see again basically 17 billion going to be wiped out. And again, that Swiss regulator FINMA announced over that weekend that the so-called additional tier 1 bonds that are regarded as relatively risky, they're basically going to be written off. And the key point here, the 81 bondholders, I mean, it's angered a lot of people here, and their investments have seemingly been lost, while the shareholders are going to receive payouts as part of the takeover. Well, isn't that nice? All right, the shareholders are going to get money for it, and the bondholders they're going to get hosed. And this was exactly what we talked about last week. We talked about how bondholders were getting hosed, especially in the case of SVB, and more bondholders were going to get hosed. Again, we can go back to the UK Guild, what we saw there. It was just not going to stop. I mean, as rates went up, it cannot stop. As the rates go up, you are going to see bond values go down. People are going to lose money. They're going to get hosed. So please, please, please check on your IRAs, your 401ks, and such, your pensions, because this came out right about the same time with that live stream. Just to say that if I caught on to it, then it's really getting to be a big, a big problem. So please check on your retirement accounts. Bondholders get wiped out, shareholders make money. I want to know your thoughts on that one. For me, I'm convinced, and I'm just going to say that consolidation through takeover or regulation is what's happening with banks. Consolidation through takeover or regulation. A wealth transfer is happening. We're seeing part of that wealth transfer happen through this.
Great financial crisis, whether we're talking about Basel rules or any of these rules, the systematically important banks, et cetera, what they did is they made the biggest banks stronger because, again, they had certain safeguards where they had to hold more capital. But on the flip side was that it also became very tough to compete in the regulatory environment if you were a smaller size bank because scale became a really big game. So to your point, you're seeing big deposit flows into the biggest, safest banks. That's happening in the United States. That's happening in Europe. The flip side is that deposit flows are hurting the smaller institutions. So all this is pointing. The politicians didn't say, "Oh, by the way, let's hurt the small banks," but that's what they ended up doing. The more regulation actually slowed the capital markets, the entrepreneurialism in the markets, and so I think we're going to continue to see that. But
All right. So there was a good point there. What do you think? Did politicians mean for small banks to be regulated out of business? Do you think this was the intent? Do you think politicians are really trying to get small banks out of business? All right. So keep that in mind. And here it is. How does what came out at the Yellen testimony, where big money is moving to big banks and leaving community banks, and bank takeovers leaving community banks, I mean, of course, and the takeovers, excuse me, making bigger banks even bigger. How does this tie in with each other? How do all of these things tie in with each other? And this is where I want to go back to what Solly Almarova wanted to do. Remember her? She was the nominee for office of the controller, because what she said back then is, it surely looks like it is starting to play out now. So let me go ahead and refresh your memory here. So I'm going to read through what she had said. So bear with me. All right. So uh her ideas amount to a socialist manifesto for American financial services. Okay, this is said in that hearing by Representative Pat Toomey. In his opening statement, Ranking Member Pat Toomey highlighted Professor Sali Amarova's, the nominee for controller of the currency, her long history of promoting ideas that she herself describes as radical. Among these ideas are her proposals to effectively end banking as we know it, turn community banks into franchises of the Fed, channel credit to what she deems productive in the nation's economy, and allow the Fed to set prices for items such as food, wages, and energy. Interesting. Very interesting. So it starts off with, I've read a variety. This is to me still. I've read a variety of Professor Omarova's writings and watched videos of her speaking. I have no doubt that she's an intelligent, knowledgeable, and experienced law professor. And this was the establishing shot that she is a smart woman. She knows what she is doing. This is not someone who did not think something through and just went and rattled off. She is a smart woman. She knows what she is talking about. So my concern with Professor Omarova is her long history of promoting ideas that she herself describes as radical. I agree that they are radical, but I'd also describe them as socialist. In fact, I've never seen a more radical nominee to be a federal regulator. So let's talk about some of her radical ideas. For starters, she wants to effectively end banking as we know it. What does that mean? Well, it means exactly what she said, end banking as we know it. In the People's Ledger, a paper she published, this was a couple years ago now, she outlined her plan for nationalizing retail banking. Under her plan, central bank accounts fully replace rather than uneasily coexist with private bank deposits. What does that mean? In other words, you could not have an account with your local community bank. Your money would be held by the government at the Federal Reserve. Right? So they're starting to dig in to community banks. Countless Americans were outraged over this recent plan for the IRS to get personal bank account information. So imagine their reaction to having the government actually take over their bank accounts. So Professor Almarova also proposed to control the money supply through these individual Fed accounts. Now I've heard that this Fed account, Fed Now or whatever it is coming online this year. So again, this falls into play here, and goes on to say, including when necessary, implementing a contractionary monetary policy by debiting those accounts. And if you don't know what debiting means, it means subtracting. Okay, it means subtracting. So be very careful with this. This, she allows, could be perceived as the government taking away people's money. I think I know why, because it is the government taking away people's money. Now, her plan would devastate all banks, but especially community ones, the community banks that rely on deposit taking for lending money to local businesses and residents. So, what would happen to these banks under Professor Omarova's plan to outlaw this business model? So, notice it said that community banks, they rely on deposits, and so if you have these larger deposits moving out of the community banks, they are going to be in trouble. And why are they moving out? Because the Fed is saying we will decide who we are going to make whole, and that of course is the bigger banks. So according to the People's Ledger, Professor Amarova might allow these community banks to continue to exist. Maybe I'll let them continue to exist, but only as a franchise for the government if they qualify for a license to operate physical branches and ATMs on the Fed's behalf. Okay, so here's that whole consolidation through regulation. Except that Professor Almarova would deny these banks their source of funding, deposits. And without a source of funding, banks can't lend to a woman opening a new restaurant in town. It can't lend to a tool and die shop looking to expand, or newlyweds buying their first home, or anything else. So let me just read a few more here. Now, given that she wants community banks to become vassals of the government, it's no wonder the independent, well, anyway, this banking committee, they're resisting what she is saying. Another senator from Texas said, the entire theory in banking, especially local community banking, is based on gathering up deposits from the local community and loaning back out into the local community so that those dollars are cycled through and stay local. You would lose all of this. A world without the local deposit, it would change banking as we know it. But of course, that's the idea. And she went on to say, the People's Ledger, that one reason she wants the Fed to become everyone's bank is to maximize its capacity to channel credit to productive uses in the nation's economy. It's troubling to ponder how she or anyone in the government would define productive uses in the economy. It sounds very, very centralized to me. How about loans to oil and gas companies? Would they be productive? And she says we don't know the answer. At a social wealth seminar, she said of the energy businesses, we want them to go bankrupt if we want to tackle climate change. So you get that? We want them. We want the oil industry, coal industry, all of these guys. We want them to go bankrupt if we want to tackle climate change. And if you had a chance to listen to this past interview with Director T over in Sri Lanka, he told you, what happened when Sri Lanka tried to go green. So again, it's we really got to study and understand this a bit more. And she also said at an investment and decarbonization seminar this year, the way we basically get rid of those carbon financiers is we starve them of their source of capital. And she's created an entire blueprint for how the government could do this, and she has advocated her plan in testimony to Congress. So she already made the plan. She did not get nominated, but the government still has her plan. And the last thing we need now, with some Americans paying $5 a gallon for gas, home heating costs going up, administration's disastrous energy policies, is a banking regulator who wants to push perfectly legal and economically necessary companies that employ millions into bankruptcy. And this is the last one this is the last two I'll read here. She has a plan for the government through the Fed to replace the free market setting what she calls systematically important prices for things like food, wages, and energy. And since the administration's done a great job on inflation, I'm sure Americans can't wait until the Fed starts directly controlling prices for eggs, milk, and rent. This is not the only time Professor Amarova has expressed support for government control on wages. As she tweeted in 2019, say what you will about the old USSR, there was no gender pay gap there. The market does not always know best. So what does that mean? Government knows best? I mean, I think we all know the answer there. But what I wanted to bring out here was when you look at what she said when she was going through her hearings for that office of the controller, what she laid out, as far as community banks and things like that, consolidation through regulation and whatnot. We're seeing it. We're seeing it happen with Yellen coming in saying, we're going to make you whole, possibly if you are in these bigger banks, but if you're in these community banks, hey, we might not do it because it may not be too systemic enough is what they're going to say. So we may not cover you. So essentially, if you got a lot of money in a community bank, they want you to take it out and put it elsewhere. Is that the right thing to do? Couldn't tell you. I mean, it's your money. You got to decide what you want to do. If it were me, I'd leave it. I would leave it in that community bank, but that's just me. Anyways, that's the idea. Are we getting it? Are you seeing the sort of master plan of both consolidating banks and removing community banks? Regulate your competition out of existence. It's not the first time we're seeing that. Who has the power to regulate? Your government. And what does government want? They want power. They want control. Let me just take a look at a few things here. Um, okay, let me move on. Although what we really saw here as well was a wealth transfer. We saw wealth transfer from something that was supposed to be relatively safe for investors, go to shareholders. Uh, well, they did label it relatively risky, but just to generalize bonds. Okay, I don't think any bondholder, risky or not, would see one day a takeover of sorts come in and say, "Oh, sorry, you get nothing." But the shareholders, you guys can have something, but you guys get nothing. I don't think that was part of the risk in these so-called relatively risky bonds. So sadly, this is going to continue. This will continue, and eventually, you and I, if not today, we are going to get caught up in this. We will get caught up in this. So let me ask you, what are you doing? What are you doing to protect your wealth? They may just come down to your bank one day and say, "Take over." That's it. We're gone. You may tell them, "Hey, wait a minute, my money is insured." They will tell you, "You know what? Yes, it is insured. Please fill out this claim, and we'll get back to you." Now, what do you do in the meantime? What do you do in the meantime while your account was wiped out? What do you do? What are you doing to protect your pensions, your retirements? What are you doing to diversify your assets, including for some of you, the location of your assets. Some of you guys did very, very well in life and you diversified your assets, but have you considered diversifying the location of your assets? And this is something again that we do help you with. All right, so that pretty much wraps up the main topic of the day. Oh, let me turn off these lights here. They're looking kind of bright there. Sorry about that, guys. Um, yeah, so that kind of wraps up the topic of the day there. Um, yes, 495, the testaphony. That's what we saw there. So let me run through some comments here. Yeah, John Patel, 55. You kind of run into a few jokes that you can fall back on there, for sure. Let me just see the comments here. I want to know, what do you guys think about this? Do you think, let's say Almarova, she did not get that position, but the plan that she laid out, the blueprint, it was there with the administration, and all you need is that crisis to happen, and then you're gonna go ahead and never let a good crisis go to waste, kind of a thing. Start implementing some of this. So what do you think? Let's see. Peter. Well, Polar Wolf Pete. I will pray for banks to crash. Well, not tonight. Some of us, a lot of guys out there, they got to get their money out first. So maybe not tonight. Not yet. Not yet. Let's see what else is out here. Um, yeah, Vincent chiming in. SVB fiasco highlighted how small and medium U.S. banks lobbied successfully to be exempted from regulations applied to big banks after 2008. Bonds held by these banks were not marked to market. Yeah, that's a good point again, Vincent. Appreciate that. Uh, Mr. Nguyen, how you doing? Counterparty risks, it's in everything. 401k and all. Absolutely, absolutely. Again, this is why I keep saying if you can, please do check on the possibility of having your retirements go into a self-directed precious metals 401k or something like that. Because with what we're seeing now, uh, we need to kind of not kind of but we need to understand what we can put our retirement accounts in that may be a bit safer. It's getting I don't want to say it's getting dangerous, but well, I just said it, so it's getting it's getting pretty dangerous out there. Check into it. Shoot us an email, sales@silverbullion.com.sg, or even me, Patrick, at silverbullion.com.sg, and I'll go ahead and walk you through, what you need to do to look into a self-directed precious metals IRA account. Let me look at a few more comments here. Um, yeah, Mr. Nguyen, say no to CBDCs, buy gold and silver. Let me see what else is out there earlier. Polar Wolf Pete, gold to hit 2180 this week. I'm gonna hold you to it, my friend. I'm gonna hold you to it. 2180. Gold to hit 2180 this week as soon as Deutsche Bank goes down. And that's interesting because for years and years, guys were saying they were really saying Deutsche Bank is in trouble. And they were and they were really saying once that goes down, everything, the whole house of cards will go. So it didn't go first, but still, if it goes, that rest of House of Cards, the rest of the House of Cards could possibly go. So that's a pretty interesting statement there. The playbook will probably be the same as Credit Suisse, merge Deutsche Bank and Commerce Bank as a solution. So there you go. The bigs getting bigger. FDIC is already broke. FDIC is already broke. Yeah, gold will make new highs. I think it will. I think it will as well. Let's see what else is out here. Um, let's see. So I'm just going through this. Yeah, Vince, a great point there again. When Austrian, the largest bank, Credit Creditenstalt, probably got that wrong, collapsed in the early 1930s, it started the Great Depression in Europe. So might we see the starting of another? Who knows? Who knows? Peter Frowine, trusting the U.S. government is a big mistake. Yellen is the U.S. government. You know what, Peter? It kind of seems like that. She just comes in and she's taking control. I mean, it kind of seems like that. Not saying it is, but she's got a lot of pull. One World Bank. One World Bank. It's getting there. The bigs, they'll get bigger. Consolidation through regulation. Let's see what else is out here. John Bethea, I did not know older people like her like her could still lie. All right. Well, I guess that is something that'll go on to the day the grave opens up for you, right? For some of us anyway. Let's see. William, PMCD, aside from wealth in metals. Oh, let me get here. There's also wealth or poverty of heart. It's a great comment. The wealth of heart is probably more important than metals wealth. That is a great comment. I've heard we're often told not to go into debt. You go into debt, you become a slave to the person that you owe. And I've heard that even if you're debt free, you still have one debt left that you owe. And that debt that you owe is to still love one another, be that blessing and not that burden. That is a debt we will always owe, even if we are debt free. It's a debt we owe to love one another as best we can. Um, so as things get a little bit more dicey, and they will, understand what gold and silver do. It's not just the price; it is about getting your wealth, um, one foot in the financial system that we have today, and getting one foot out of the financial system that we have today. It's about understanding this. And again, if you think of a ladder, the left side of the ladder could be gold. The right side of the ladder, maybe it's Bitcoin. But the rungs know how to move in between those two parallel sides. This is all about having something, an alternative to what we have today, because you can see what we have today, it's not working. It just is not working. So again, be a blessing, not a burden. Keep these things in mind. With that, I'll head out. Let you guys have a early evening. Get some sleep if you're in the states. If you're here in Singapore, good morning to you. Happy Monday morning. Let's pay attention to the markets and what's going on. Vincent, I appreciate all the info that you gave this morning. Quite a bit of info, so appreciate that. Uh, so again, be a blessing, not a burden. Keep your head on a swivel. Take a look at everything that's going around. The storm that's around us, again, some people have yachts, some people like me have a canoe, but we are all in this together. It's all about, family, friends that we need to do our best to take care of. Even if it means trying to tell them about what's going on and sounding like that crazy uncle that every family has. But again, be a blessing, not a burden. I'll wrap this one up. I will see you guys next week. And as always, saddle up for what's coming ahead. Silver up as well. You guys take care.